why you should not buy gold. This blew me away. Everybody has a fear of missing out. Everybody wants to jump in, scrape up their pennies, and buy in this upswing when gold is at record highs. Everybody has that feeling. And of course, no, this is not the time to buy gold. But this argument here is going to show you why you should not be buying gold, period, during this, whether we drop back down to $2,000 an ounce, you should not be buying gold. This blew me away. In this video, I'm going to break this down for you, and this is going to make perfect sense, especially for those of us who have been stacking silver and stacking gold for so long. Let's start at Bloomberg. And this is an article that says, Turkey central bank draws down gold reserves to meet high demand. The article starts, the Turkey central bank has been selling off its gold reserves. The central bank has been selling off its gold reserves to meet local demand, which has surged as citizens seek to protect themselves against inflation, just like here in the States, and protects themselves against currency depreciation. The demand for gold is so strong in Turkey that the central bank is starting to liquidate its own supply to meet this great demand for the public. It says the central bank's gold reserves have been tumbling over the past 7 weeks, and it has shown a decline of 9%. There was, as you remember, there were these massive earthquakes in Turkey, and even before that, they've been struggling with inflation more than we've ever hit inflation. So the people there are clearly looking for a safe store of wealth. They're looking for something that could be real money, which is why we all turn to gold. But now let's look at this data, and this will help make sense more when I say you should not be buying gold. This is from the precious metals appraisals, and it says silver's recent demand expansion comes from spectacular growth in solar installations. Right, global demand for silver used for PV cells is estimated to have reached a record 190 million ounces last year, up from 100 million ounces in 2021, and it now represents 30% of industrial silver demand. That's a lot. 30% just for solar. I mean, that is really a big chunk. This says that in 2024, solar silver demand could exceed 200 million ounces. So there clearly is a demand for silver industrial uses. Also, China has a great demand for silver, and we don't realize this in the States. It says China represents 85% of global manufacturing capacity, and in 2023 installed nearly as much new solar domestically as the whole world did in 2022. So China is, not only are they hoarding gold, but they also have a strong use for silver. And that data is showing us that China is actually impacting our price of silver. This article says power grids could be a bottleneck for new solar installations. This year, the rate of new installation growth in China forecasts that this demand will be so great that the bottleneck of getting a hold of that silver, as we know, as we've heard from our Silver Institute, that the estimated amount of silver compared to how much silver there actually is there's a big discrepancy going on with how much silver there actually is compared to the demand. This article says that in general, let's look at gold. The geopolitical tensions have added fuel for gold's fire. And after poking its head above $2,400 an ounce, which we love to see, gold did drop slightly, and it landed around $2,350 an ounce. The weekly gains continued despite the March U.S. CPI data exceeding expectations, and the market further priced down the Federal Reserve's cut to 2 times in 2024. That can be debatable. There might not even be any cuts in 2024. Cautions against rapid rate cuts were felt across the Atlantic too. The European Central Bank also held its rates at 4% on Thursday and implied that rate cuts in June are possible only if inflation closes in on 2%, the 2% target. And they actually used the quote, in a sustained manner. So all of these central banks they're all in the same web, right? We're in a global economy, and every central bank is really being very conservative and cautious as they decide about these cuts. This article says at the same time, gold ETFs continued to see net outflows while the dollar continued to strengthen. Factors that typically weigh against the gold price. This is what's so strange. We've seen this in the past week here gold and the dollar and treasuries have all shown strength. When's the last time we saw that? I mean, you rarely see this. It's supposed to be an inverse relationship. As the dollar shows strength and as treasury shows strength, that means that people are investing in that sector, and therefore they're pulling the money away from precious metals. But here we're seeing everything move up, and that tells me, looking just at that data, that tells me that gold is going to continue to go up. There's nothing that's slowing gold down. We have, right, it's the trifecta, right? We have wars going on and increasing. Just look at what happened with Iran and Israel in the past few days. We have uncertainty with interest rates. And last, we have this nightmare that's about to come blow up in our face for commercial real estate and the regional banks that are struggling with those loans in commercial real estate. I mean, those three are pushing gold up. The part that is so remarkable, and the part that shows that we should really be looking at gold in a different way, is that the dollar is showing strength and treasuries are showing strength at the same time that gold is still on this upswing. It's so strange. We never see this. But really what we should be doing at this time is not looking at gold through the spot price, which even it's from the start of this video, I've been mentioning spot price terms, right? Because I'm so in it. I'm so used to looking at gold through the spot price. What we really should be doing is not buying gold at this moment. No. And I'm not saying that because gold is so exceptionally high. Yes, it is exceptionally high, but what we should be really doing is focusing on the gold to silver ratio. And that is how we really win. When we look at the gold to silver ratio, presently it's about 83 to 1. And what we really want is to stack silver, keep buying up silver like I'm holding in my hand here, maybe more generic silver. This is a reverse proof that comes with a premium. But buying silver rounds, buying silver bars, stacking as much silver as we can, especially when silver is at reach, and waiting patiently until that gold to silver ratio drops closer to 70, 71, ideally 50 to 1. When it's down there, it's not, and it has happened in the past decade. It's dropped to 51. We just have to jump on it when it does, and then cash out the silver for gold. That's really the way you do it. You stop looking at the spot price, and especially now with gold being so expensive, we're all excited. Those of us who have jumped in and purchased some gold in the past years, past decades, of course, we're all very excited to see gold going up into the 2,300, 2,400, 2,500, right? Like that's what we want. But no, you do not, and you should not be buying gold. You should be focusing, and I include myself in this. I should be focusing. We all should be focusing on that gold to silver ratio and taking this time, even though silver is still in an upswing. It's absolutely within reach. And I don't sell silver. I'm not one of these channels that is sponsored by a bullion dealer, an online bullion dealer. I could say whatever I want. All those silver stacking, gold stacking channels that have sponsors, that have online bullion dealer sponsors, they can't tell you their true opinion because their boss, the sponsor of their show, is going to get mad at them. They can't tell you, hey, don't buy gold. No, you'll never hear that. So I'm just a regular guy. I'm just a silver stacker. I'm telling you my opinion. And this is the correct way to do it. We look at the gold to silver ratio. We take this time to buy up silver, even when it's $28, $29, even when I'm confident it's going to keep going, even when it's at $30, $31 an ounce. It's still within reach. We stack as much silver as we can, and we wait for that gold to silver ratio to tighten. So when it gets to 70, when it gets to 50, then we cash out and we swap it for gold. That's how you do it.